Welcome to another episode of the Capital Gains Tax Solutions podcast, where we believe most high net worth individuals and those who help them, they struggle with clarifying their capital gains tax for options. I'm so excited. Today, I have an opportunity to bring on a good friend and a real estate professional, true pro in the industry when it comes to residential and growing in this commercial part as well. He's out of the great state of California. In fact, he's in Sacramento and he works in the Bay Area as well. And today we're going to be diving into Sacramento, selling Sacramento real estate and Bay Area real estate, and so much more. Our guest here is Jason Habeeb. Jason, how are we doing?
Good. How are you doing, Brett? Thanks for having me on. Appreciate it.
Fantastic. And good to see you again. For our listeners getting to know you for the first time, would you give a little bit more about your story and your current focus?
Yeah. So I've been doing real estate full time now in the Sacramento and Bay Area markets for about 8.5 years. I specialize originally from the Bay Area, so I specialize about 50% in the luxury market in the Bay Area, and the other 50 where I currently reside in Sacramento now. So I also offer different programs for rezoning commercial projects, improve value, capital gains, tax solutions. Hence why Brett and I are good friends, and residential in the luxury community. So it's a little bit about what I do, and how I got into it was planning on being a pro golfer, but God had different plans. And so I ended up becoming a pro real estate agent, actually. And this was 8.5 years ago. Met a good mentor of mine, and the rest is history. He said, you need to do something different. There's a million realtors out there. What's different about you? And if you can't answer that in 10 or less seconds, then get out of the business. So that's kind of my background and what I do and how I got into it.
Amazing, Jason. Absolutely. And I had a great opportunity to get to know you over the years and spend time together. And you are a pro, and that's it's great. And so let's share some of those pro secrets, right? Like, what would you say, Jason, is the number one secret to selling, Sacramento and Bay Area real estate that could help anyone who's listening right now?
Well, I think we're both into education business, Brett. It's not really the sales business. I'm not trying to persuade somebody to do something that is not in their best interest, right? And so when it becomes becoming a pro, I think understanding the numbers, understanding the market in both locations, what's driving the buyers' factors in their minds, the sellers' factors in their minds, what's the market actually doing versus what the media is portraying the market to do. And so I think that's like the first step in both of our businesses, and for the consumer to fully understand what the heck is really going on. And I think that's what we're going to share today. So
yeah, let's dive right into that, right? Because the marketplace has been pretty wild. We've seen interest rates that have increased, obviously drastically. We've seen in fact, I think at the highest as of last week in the all time in American history. Well, not American history, but I guess the affordability gap, right, compared to where interest rates are at. So that's actually better, right? It used to be like 18-20% back in the Jimmy Carter days, right? Mm-hmm. So talk about some of the major challenges and some creative ways that you're helping sellers sell at a good price and still make good profit.
Yeah. So right now we'll start with Sacramento just for the sake of time. The Sacramento market, the number of units is actually down close to 45% year over year. That's July 2022 to July 2023. Those are the number of units. That's why a lot of people do not want to sell. You've probably been reading on the news, and just your local realtor market is saying that a lot of people don't want to sell because they don't want to go from a 3% interest rate that they got in 2020 to close to 8%, which is what we're at right now. So why would I sell unless I had the cash to go in and buy something with cash, or an investment, or move out of state, buy down, so on and so forth. And so that's why we're seeing historically low inventory. But we're also seeing what's kind of unique is the prices haven't really gone up. They haven't really gone down. They're kind of flatlining here in Sacramento. Now it's different, city to city, but more or less, some cities are up a couple percent year over year. Some of them are down a couple percent year over year, but we haven't really seen a big decline. And that's driven by the low supply that we have. There's still people out there in the market looking to buy. And those people are usually going through life changes versus, they need to buy versus want to buy. Those want to buys are on the sidelines. They're waiting for the rates to kind of cool down. And, I think that they will. The whole reason why, for the audience that doesn't know how mortgage rates work, the whole reason why they're going up is they're tied to the bond market and the 10-year treasury yield. And the feds keep on raising the federal interest rates, which kind of messes up the bond market, which raises the 10-year treasury yield, and that has an effect on mortgage rates. And so once inflation, comes down to a normal level, which it will, it's already kind of subsiding. I know they're going to do a few more rate hikes from what I've understood the rest of the year. But eventually, hopefully midsummer next year, we'll see the rates kind of dip down into the fives. Brett, if that happens, it's going to be a lot more people that are on the sidelines coming back to the market, because the big thing right now is affordability for so many people.
All right, that makes me sure I captured that because that was so well said. So it sounds like there's definitely I'll say sticker shock is the word, but it's just mortgage shock, right? If you're at a 3 or 4% and you're fixed and you're in your house and you want to move, but you go, look, I'm going to have to double my interest rate or more. It could be, that's just like, I don't really want to move that much, right? Versus the need to want or need to sell or need to move, right? Then they're having to deal with that. And also prices are flat, which is interesting, right? Because affordability is still so out of hand for a lot of folks, and there's just such low inventory. And then you couple that with potentially, it looks like inflation is starting to subside, and we think that interest rates perhaps might come down in a year or so. A lot of people are just deals aren't happening. Is that a fair summary, Jason?
Yeah, I mean, I think so. Deals are happening. It's those people that need to do something for a life change, period. The affordability, the average income, household income in Placer County, which is the county that I live in outside of Sacramento, I believe is like for two people in a household, it's about $100,000. Okay. You factor in the average price point in Placer County is about $670,000. And if you have $100,000 down, you have a $570K mortgage. With today's rates, you're looking at a $4,500 a month mortgage rate. Okay, now we talked a little bit about creative solutions. Now I wanted to talk about what we could do to kind of combat these rate hikes. Okay, and so if you need to move and you need to find a home, and affordability is an issue, which I think it is for most people looking right now, there's a thing called a 2-1 buy down. It's a loan product, okay, where you're going to get a seller credit to buy down your interest rate for up to 2 years to keep that affordability low for you, that monthly obligation to get you into a home. Eventually, after 2 years, if you don't refinance that loan, the rates will go up. They're adjustable, but that will help buy down your prepaying the interest, okay? And we get the seller to do a credit. Now, we're seeing a lot more of that in the new construction development. New construction is actually booming in Roseville, Brett. I'm not sure if you're aware, but I mean, there's 40 active inventories right now currently in West Roseville that I've seen. This is as of a few days ago. And what they're doing is they're offering up to $20,000 of incentives to use their lender for title and escrow fees to buy down your interest rate to an affordable rate. So it makes it easier for you to get into a brand new shiny home. So we are seeing a little bit of creativity in the market. There is some options. It's not all doom and gloom with these rates. They will go down, and it's just no one has a crystal ball, so we can't really track when it is. But as soon as inflation stops or slows down, then we're going to see the rates kind of come back down to normal. And normal would be 5%, not 3%. So
we were spoiled for so many years. Really well said. By the way, we're talking with Jason Habeeb. You can learn more about him by going to HabeebRealEstate.com. HabeebRealEstate.com. That's HABEEB realestate.com. So Jason, let's shift to the Bay Area now, right? I know you have some interesting stuff going on there. Talk to us what you're seeing in the Bay, maybe even how it compares and contrasts versus Sacramento.
Yeah, so Sacramento is not the new Bay Area. There's a big debate going on here locally that Sacramento has become the new Bay Area. So I basically split my time between the Bay Area all the way down to San Jose, even Monterey, Silicon Valley, San Francisco City, Marin County, and everything in between. And so I got a pretty good state on what the buyers and sellers are feeling over there, what the market is, and what in comparison to Sacramento. Now, Sacramento has 35% of its current buyer pool coming from the Bay Area. So me being originally from San Francisco, I have a lot of friends and family and acquaintances over there, and it just fit my business model to do both areas. So I'm familiar with both areas. But as far as the market's going right now, obviously the prices are 65 to 70% higher, sometimes more than that, depending on if you're talking about residential in different areas in the Bay Area. But for the commercial space, I'm sure a lot of your audience have read the article that there's like 25 million square feet of open office space in San Francisco City right now. office is getting hammered right now. The Salesforce tower is pretty much empty. As far as I know, there's a lot of vacancy going on. Medical office, I have a lot of clients kind of 1031ing or doing the deferred sales trust or the CRT to go into medical offices because they have anchor tenants and medical tenants. They tend to stick a lot longer with medical. It's usually a safer, longer term bet. And so that's what I've been seeing. San Francisco itself, you've probably been reading what about the homelessness. They're actually rolling out a California state density tax bonus program. And what that is if you have, let's just say, an office building or an auto shop, and what you're doing is you're going to be rezoning that property for a mixed use multifamily commercial building. The state or the city is going to give you a bunch of tax incentives to do the plans, get the permits, do the drawings, the renderings, and get all the bids. And then what you've done is you've actually rezoned it from industrial or office to mixed use multifamily. And so there is programs to do that. Now the catch is you have to have 7, or a certain percentage, I believe it's like 25% of affordable housing units. It has to be some sort of mixed use type of space as far as I know. But it's something that a lot of my clients are taking advantage of. One, it's cleaning up the homelessness in the city. It's improving their property value without actually doing any of the development, which comes with unknown costs. And they're getting it ready for that developer where it's like, hey, we did all the groundwork for you for the last 2 years. All you got to do is get your shovel and break ground and go. You got all the approvals. So you're able to get top dollar to improve your property without really doing much work. It's a lot of work on the ground level, but you don't have to manage a construction zone for a couple of years. So I have a lot of clients doing that. So.
Yeah, fascinating. Yeah, go talk with Jason Habeeb, HabeebRealEstate.com. So Bay Area, more expensive. Sure, it's always been that way, right? Vacant office space getting crushed, right? Yeah, absolutely. Medical office. Yeah, I actually invested in some medical office off of J Street right now, and it's done great. We actually have Kaiser as a tenant. Next to the Mercy General Hospital off of J Street in Sacramento. So, and that's done fantastic. And the values have gone up. So yeah, not all office is all bad if you have the right tenant, but definitely tough right now going. Multifamily is doing well. Still occupancies are great. I'm seeing it's not so much from commercial real estate, you got to break it up to like the segments. Like industrial has been fantastic, on fire, doing great. Office is getting hammered depending on what office it is. Multifamily occupancies are still very healthy. Part of the affordability gap actually pressures people into renting, right? More likely to rent as interest rates continue to rise and values basically stay, let's say, pretty even, right? For a lot of places. And so you're seeing high occupancies. However, a lot of people are taking these loans that are adjusting. Like they didn't either bought some kind of like 2-1 or some kind of rate lock, but now they're expiring. And now these loans are adjusting much higher than they anticipated. And so there's going to be some pain, Jason. So talk about, debt being the pain point, breaking deals up versus just the kind of just intrinsic value of property.
Yeah, I mean, I think people are going to be in trouble. I think that's in the residential space and in the commercial space. I think a couple of years ago when the market was hot, rates were low, money was cheap. I think a lot of people kind of overextended themselves a lot in the multifamily space specifically, and then also in the residential space. I think people paid, 100 to 150,000 over because that was just, there's nothing out there. Rates were low. And now the market is kind of adjusting, it's flatlining, it's not tanking. But a lot of those people that overpaid, paid above appraised value tremendously. I had clients myself that, paid 10, 20, 30,000 over that lost their property, as far as making their offer, and they lost out against 10 other offers that were going $100,000, $200,000 over list price. And that's just unreasonable. I never advise my client unless it's their dream property and they had the money to do that, but it's just overextending. Something's got to give. Again, no one has a crystal ball in both markets, but we could study trends, right? And that's how we advise our clients. And talking about being a pro is, hey, what's best for you at the end of the day? What are your goals, short-term, long-term? And then here's how to go about it, right? And I think everyone has different goals, and it's important for us as pros to understand what those immediate goals are so we can best counsel our clients moving forward. So.
Oh, I couldn't agree with you more. And there's a neat part of I took some success coaching training, and they talked about figuring out what the need is, right? Discovering the need is step one. So it's going to be a deep discovery phase of personal, financial, what goals and what is it that you're trying to do, right? Where you're trying to go, and then clarifying the future pacing of that goal, right? Which is the next step, which is, hey, what would it mean to you to be in that dream house or to be in that multifamily project or to have that amazing tax deferral strategy to defer millions of dollars of tax? What would it mean to you in 1 year? What does that look like? And helping somebody to go beyond just where they're at now, but where they're going to be. And then figuring out what that emotion, what's behind that, and then linking yourself as that guide or that bridge to help them achieve that. And when you can do those things, then it opens up the opportunity to sell more real estate, to do more business, to help more people, because you're approaching it like a pro based upon their unique circumstances, their goals, and what they have connected with emotionally and visually in the future. So any thoughts on that, Jason?
Yeah, I mean, you hit the hammer. I mean, the nail with the hammer right there, right on the head. I mean, it's one of those things where a lot of people just in the sales business, not just the real estate business in general, they focus tremendously on the deal. We got to get this deal done. Got to move on to the next. That's transactional versus relational. But when you talked about being the bridge, I think that's what we are. We're leading one place, depending on their goals, to another, right? And every client's going to have different goals. It's important to listen, to understand what's going on. Where's the motivation here? And the motivation's low right now, Brett. With the state of the economy, we're headed into election year. Historically, real estate typically goes pretty well in an election year. But it's our job to provide updates. I send out monthly updates regarding the local real estate market in Sacramento. And I post once in a while on my Bay Area for my Bay Area clients about what the Bay Area is actually doing, because I want to make sure I'm getting out truthful information out there, non-biased information, so people understand what's going on. Because all they're hearing, most people get their information from their friends or the news, right? And so unless they're actually in the trenches day to day like we are, understanding what's really going on and what are the solutions, not just, okay, it's the end all be all, right? How can we create solutions moving forward? And I think your solution with the Deferral Sales Trust, is a unique example of what can be done, an exit strategy that's been proven to help people save more money and move forward with their goals, whatever they are, short-term or long-term, right?
Yeah, I appreciate you sharing that. If anyone's curious about that, you can go to capitalgainstaxsolutions.com. And if you're a luxury realtor, commercial estate broker, really anyone who's helping others sell highly appreciated assets, you want to have a flexible way for your clients to defer tax and not have to be stuck in what's called a 1031 exchange that oftentimes puts people in too much debt, not enough liquidity, not enough diversification, and also doesn't work for primary homes or business sales. And so we offer something called a Deferred Sales Trust. You can go to capitalgainstaxsolutions.com to learn more about that. Jason, that being said, are you ready for the lightning round?
Yeah, let's do it.
All right. Knowing what you know now, if you could go back to your 25-year-old self, what is the one golden nugget make sure to tell yourself to do?
Stay persistent. Never quit.
Question number two. Excellent. Question number two. What is the number one book you recommended or gifted most in the past year?
The Purpose-Driven Life by Rick Warren.
Excellent. I actually read that yesterday, or part of it yesterday.
Oh, great.
Try to read it about every day. Question number three. What are you most curious about right now?
I think I'm always curious about the real estate market. What's it going to do? How can I advise my clients? But at the end of the day, we're only supposed to control what we can, give the rest up, and just be educated. And there's no worries, or I guess it's more curiosity than worries at this point. But I'm kind of curious on how everything's going to shake out. It's kind of exciting at the same time because through a quote unquote recession, there's always opportunity. Regardless of where the market is. And so I'm just excited to kind of seek that opportunity moving forward.
Absolutely. Good answer. I like it. Question number four. What is your favorite leadership quote or theme that you strive to live by?
Don't take anything personally. I think a lot of people take things personally, whether it's somebody, said something about them or whatever, your family member, your friend, a peer. I think don't take anything personally and you'll be okay.
Okay, excellent. I like that. Last question. After all our success selling over $100 million in real estate over the last handful of years in Sacramento and the Bay Area, what's maybe the one practice that you try to do on a consistent basis that helps you stay centered in your values and stay encouraged to charge forward or reach new heights?
Follow up, follow through, and follow back. So follow up with any prospective clients. Follow through with what you say you're going to do. Your word is your bond. I truly believe that. Follow through with your current transactions, and then follow back after the transaction is closed. Maintain that relationship and add value. See if people need anything, because they do. Just because the transaction is done, you still have an opportunity to serve, and the ability to serve at a high capacity even after the transaction is done is my words of wisdom.
Amazing. Jason Habeeb, it's been more than a pleasure to have you back on the show. And I want to thank you for being a friend. I want to thank you for being a pro and serving people in Sacramento and the Bay Area with real estate. I want to encourage you to keep using your gifts and talents to help people achieve their goals financially with real estate and their dreams too, with new homes and selling and moving and everything else in between. For our listeners who want to get in touch with you, would you remind them one last time what's the best place for them to find you?
Yeah, HabeebRealEstate.com. You can just Google that. My website has all my information. And then also just give me a call. Cell phones 916-223-3495. I work with Remax Gold here in Northern California.
Amazing. Thank you, Jason. And I also want to thank all of our listeners for listening to an episode of the Capital Gains Tax Solutions podcast. Also stream on Expert CRE Secrets podcast as well, where we believe most high net worth individuals and those who help them, they struggle with clarifying their capital gains tax deferral options. Not having a clear plan is the enemy, and using a proven tax deferral strategy such as the Deferred Sales Trust and working with amazing professionals like Jason Habeeb can help you create and preserve more wealth. If we could be of any service to you for any of your exits, please go to capitalgainstaxsolutions.com. Also check out the new book that was released, hit #1 bestseller. Pretty cool. We're proud of that. It's on Amazon, Building a Capital Gains Tax Exit Plan. It's the proven playbook for unlocking your ideal wealth plan when selling assets for yourself or for your clients. Learn how to eliminate the 1031 exchange forever. Win more listings using the Deferred Sales Trust. It's all right in the book. You can get it right now by going to Amazon. Appreciate everyone listening. Please share this with someone who can be inspiration and help too. And we will talk to you again real soon. Bye now.
All right. Thanks, Brett.